rules of origin provisions under the Commercial Treaty. So, because they are allowing free trade, there must be some kind of guidelines. Otherwise, it's possible that countries may easily import goods from non-member states and want to take advantage of the preferential tax rates. So these rules are what guide in which goods will qualify for the preferential rates, and mostly they are guidelines based on, say, the processing of the goods, and there are companies, local companies that have had problems. Bidco had problems a couple of years ago with their products when they attempted to get the preferential commercial rates for Malawi. And part of what had to be clarified is Malawi's argument was, you guys import crude palm oil. So crude palm oil is used to make the edible oils. But then there are rules to say you can import. But then you have to process what you have imported. Once you process, there are specific percentages you're going to look at that must be achieved so that you consider that you've added value and that you own the product. Now you own the product, even though you had imported the inputs. So these are rules that are to protect. But sometimes some countries become unreasonable. Was it last year or last year but one? Tanzania refused to grant the preferential trades to confectionaries from Kenya. Confectionaries are baked products like cakes and stuff like that. What was their logic? They said, well, the sugar you are using in those cakes are not from Kenya, they're imported. You see, it doesn't make sense because sugar and the cake are two different things. So even anybody, even a spectator looking at, can be a very good judge and say, look, there's processing. Because you are talking of importation of sugar, but this is now not. These are cake. A cake and a sugar are two different. So sometimes some countries just become difficult. So rules of origin provisions under the Commercial Treaty, you say these are the stipulations. These are the stipulations. These are the stipulations or requirements that must be fulfilled. These are the stipulations or requirements that must be fulfilled. These are the stipulations or requirements that must be fulfilled in order for goods to attract, in order for goods to attract, in order for goods to attract the preferential commercial rates, in order for goods to attract the preferential commercial rates. Then you say the provisions include, number one, the goods must be consigned. The goods must be consigned. The goods must be consigned. The goods must be consigned from a member state directly. The goods must be consigned from a member state directly. The goods must be consigned from a member state directly to a consignee in another member state, to a consignee in another member state, to a consignee in another member state, and such goods must be, A, wholly produced in a member state, wholly produced in a member state, wholly produced in a member state. B, produced by a member state, wholly or partially, produced by a member state, wholly or partially, produced by a member state, wholly or partially, from imported materials. produced by a member state wholly or partially from imported materials by a process which effects a substantial transformation, by a process which effects a substantial transformation, by a process which effects a substantial transformation to those materials such that, the value added resulting from the process of production, the value added resulting from the process of production, accounts for at least 35%. Of the X factory costs, accounts for at least 35% of the X factory cost of the goods, accounts for at least 35% of the X factory cost of the goods. And number two, the cost, insurance, and freight. The cost, insurance, and freight. The cost, insurance, and freight in bracket CIF. The cost, insurance, and freight in bracket CIF value of those materials. The cost, insurance, and freight in bracket CIF value of those materials used in the production of finished goods. Accounts for less than 60%. Accounts for less than 60% of the total costs. Accounts for less than 60% of the total cost of finished goods. And number three, the goods are designated. By the council. The goods are designated by the Council of Ministers of Commerce. The goods are designated by the Council of Ministers of Commerce. The goods are designated by the Council of Ministers of Commerce to be goods of particular importance. To be goods of particular importance. To be goods of particular importance. To be goods of particular importance to the economic development of the member states. To be goods of particular importance to the economic development of the member states. To be goods of particular importance to the economic development of the member states. So that is COMESA. I will not discuss EAC or East Africa Community because the same things are duplicated. You know, they have the same objectives. They want to create the same things. Monetary union, economic union, and all that. So if you get a question in EAC, please answer with the same content. So next I want to look at another concept called tax havens. The concept of tax havens.
Yeah, explain the difference between the two.
Yeah. Between
COMESA and the C.
Yeah, I've just been explaining that. And they are both, the major difference is just the regions. EAC is member states are within East Africa community, which they are now 6, maybe 7, because South Sudan was admitted and now DRC has been approved. Just the members, but the objective is the same. create a free trade area, create a customs union, create a common market, create an economic union, have similar currency. A lot of these ideas are the same. The problem is, the challenge is to achieve them. That's what the challenge is. Because some of those objectives were said to have been achieved in 2015, not even now. Those objectives you're talking about. But neither COMESA nor EAC has come close. The only regional bloc that has come close or that has achieved all those levels of growth is only European Union. It's not within Africa, unfortunately, but that's the only example we can give because the euro is tangible and you can see it. It's there. That's the only country. Even the one the US formed in Mexico called NAFTA is at a very basic stage after many, many years. You saw how Trump messed up everything when he was there. He even wanted to build a wall with Mexico. Yet they have an agreement that, look, we shall work together. Then you create a wall with people you intend to work together with. It doesn't make sense. And Mexicans only come to the US to work. You see, there's a lot of work in the US, especially, their farming is capital intensive and it's quite large scale. So during harvest, they need people to help them, especially with manual labor. That's what Mexicans come to do. And Trump doesn't want them there. And people in the US don't want that kind of work. There's some kind of work the citizens can't do. They don't want to pick vegetables and fruits all over. Okay, machines will do most of the work, but you still will need human effort at some point to do packaging and stuff. So we come to tax havens. So tax havens could be a region or it could be a territory that is deliberately intended to remove taxes, and probably the intentions are good. They want to motivate trade or they want to attract investment in their regions, but they feel genuinely that taxes will discourage that. So they don't have taxes, or even if they have them, it's very minimal. And then something else that is very controversial globally is they deliberately want to keep information secret, confidential, especially for financial information. So anybody who invests in these countries or territories will be assured that, please be assured that anything you do with us is confidential. Now, that is wrong because, no, let me not say it's wrong, but that's where the controversy begins, because that means it will attract all manner of investments. It will attract those who deal in drugs because they assure the money, whatever investment they've been told will be secret. So if any country is doing investigations for their citizens or any criminal activity, or even internationally, when investigations are being carried out, when you reach tax havens, you reach a brick wall. You can't get to any information they cannot give you. That's where the problems begin. So what has happened is there are very big global companies that do businesses but want to run away from tax. So what they've done is simply set up briefcase companies in these countries. And these are big companies, US companies and global companies. So they find a way to now. Panama is just one of them, there are many, Panama is one of them. It will also include leaders in countries, with their ill-gotten wealth, and they have a place, a very safe place. Even Dubai is one of them, They'll not disclose what you're doing, and they have little or no taxes. And even United Arab Emirates, they attract the very wealthy people because of secrecy. They will not disclose anything you're doing. That's your business. And again, you're sure, and other places like Jersey, we have an old case of our own people. There's a former minister, those days they were called ministers, Minister of Energy, and a former MD of KPAC, who were beneficiaries of bribery. And those proceeds were kept in a tax haven deliberately in Jersey. For some reason, that information, I don't know how it reached the authorities. So the authorities have been camping here to extradite these fellows. The last 6 years, I don't know, 7 years. But once in a while, you see the matter coming up. So I don't know whether it's the Kenyan wheels of justice that grind very soon. So all they wanted, they say, Kenya, look, we have some proceeds in account. You can have it, but give us these two so that we can put them on trial. We just want justice. Now, these guys have never been extradited. So the cases are with the courts. The last time I read, I think they had approved one of them to be taken. I think it was, I can't remember whether it was Gishuru or Gishuru. But we were, I had those are about the other day, you know. So tax havens, you say a tax haven is a state. A tax haven is a state, country, or territory. A tax haven is a state, country, or territory. A tax haven is a state, country, or territory where certain taxes are levied, where certain taxes are levied at a very low rate. Where certain taxes are levied at a very low rate. Where certain taxes are levied at a very low rate, or not levied. Or not levied at all. Or not levied at all. Next point. It also refers to countries which have a system. It also refers to countries which have a system. It also refers to countries which have a system of financial secrecy. It also refers to countries which have a system of financial secrecy in place, of financial secrecy in place, of financial secrecy in place. Then you say financial secrecy can be used by foreign individuals. Financial secrecy can be used by foreign individuals. Financial secrecy can be used by foreign individuals, or non-residents, to avoid certain taxes, in their own countries. To avoid certain taxes in their own countries. To avoid certain taxes in their own countries. Then you say the Organization for Economic Cooperation. The Organization for Economic Cooperation. The Organization for Economic Cooperation and Development. The Organization for Economic Cooperation and Development, in brackets OECD, the Organization for Economic Cooperation and Development, in brackets OECD, has identified three key factors, in considering whether a country is a tax haven, A, the first key factor is nil or nil or nominal tax rates, nil or nominal tax rates, nil or nominal tax rates, then you say tax havens impose nil. Tax havens impose nil or nominal taxes. Tax havens impose nil or nominal taxes. Tax havens impose nil or nominal taxes and offer themselves to be used, and offer themselves to be used, and offer themselves to be used to escape high taxes, and offer themselves to be used to escape high taxes by non-residents, offer themselves to be used to escape high taxes by non-residents from their own countries, from their own countries, from their own countries. B, protection of personal financial information, protection of personal financial information, protection of personal financial information, protection of personal financial information. Then you say tax havens have laws or administrative practices. Tax havens have laws or administrative practices. Tax havens have laws or administrative practices under which businesses and individuals can benefit. Under which businesses and individuals can benefit. Under which businesses and individuals can benefit. Under which businesses and individuals can benefit from strict rules, from strict rules and protection against scrutiny. From strict rules and protection against scrutiny by foreign tax authorities. Protection against scrutiny by foreign tax authorities. This prevents the transmission of information. This prevents the transmission of information about the taxpayers. This prevents the transmission of information about the taxpayers who benefit from the low taxes. About who benefit from the low taxes. Then C, lack of transparency. Lack of transparency. Lack of transparency. You see, there's generally lack of transparency. There's generally lack of transparency. There's generally lack of transparency in the operation of legislative. There's generally lack of transparency in the operation of legislative, legal or administrative provisions, in tax havens, legal or administrative provisions in tax havens. This includes secret rulings. Negotiated tax rates, or other practices, that fail to apply the law. Negotiated tax rates or other practices that fail to apply the law openly and consistently. openly and consistently. Openly and consistently. Then examples of tax havens. Examples of tax havens include. Examples of tax havens include. So you have Cayman Islands. Cayman Islands. This is part of the UK. Cayman Islands. Cayman Islands. You have Jersey, it's still part of the UK. No, it's not an island. Jersey is in the UK. So you have Jersey, you have Bahamas, you have Seychelles, you have Mauritius, you have Dubai, you also have Panama. Even Ireland is a tax haven. Yes. Finally, we look at benefits of tax havens. Benefits of tax havens. Benefits of tax havens to an investor. Benefits of tax havens to an investor. Of course, this the disadvantages are more, especially to countries that would have used that revenue to provide services to their people, you know. So small countries lose a lot to these tax havens. So these benefits we are talking about are selfish benefits that an investor will get on an individual basis. Forget about the bigger benefits that would have obtained maybe by providing health services, using that tax revenue, or even on education opportunities in poor countries, you know. So benefits, the first one, tax-free interest, tax-free interest income, tax-free interest income, tax-free interest income, tax-free interest income, another benefit, tax-free dividends, tax-free dividends distributed by companies, tax-free dividends distributed by companies. Next, a fixed corporate tax rate. A fixed corporate tax rate. A fixed corporate tax rate based on the level of capital investment. A fixed corporate tax rate based on the level of capital investment. Next, no capital gains tax. No capital gains tax. No capital gains tax. And finally, tax-free repatriation of profits. Tax-free repatriation of profits. Tax-free repatriation of profits. Then we look at transfer pricing. Transfer pricing.
Taxation means no taxing profits.
So repatriation means you are taking away profits you earn back to your own country. You will not tax it. So we look at transfer pricing. So this is another potential area that countries look at, especially for corporations, multinational corporations operating in developing countries. So they manipulate prices of whatever they produce, whether it's prices of flowers or goods, and the objective is to pay very little taxes in the countries they operate. I was reading about a country, I don't know why I can't remember, in West Africa, either Central Africa or West Africa, where they have oil. American companies have gone there to drill oil. Whatever the country is paying is like 60% of the usual price that is paid. But the president of that country accepts that because whatever is paid, he pockets. Doesn't go to the country's revenues. So the guy, they've traced his wealth in the US, the guy has built homes in the US, the son moves around in big cars, you know, and the country back home, it's really country, Guinea. I think it's Guinea. It's Equatorial Guinea. And back home, the conditions are pathetic. There's garbage in the streets everywhere, and people don't even have services. And one man and his family are simply guzzling everything. And one of the US companies was being interviewed with some Australian reporter, reporting, and we were asking them, don't you have moral or ethical values yourselves? Why do you agree to work with that government and even underpay them? The guy looked at the cameras in the face and said, if you don't do it, somebody else will do it. Yes. I'm doing it because if I leave, somebody will come in. Selfish reasons. It doesn't have anything that, and that's there we are. Saying I'm doing it because I think that company must have been Exxon, the US company that is drilling oil. And I think the country is Equatorial Guinea. Try and look at the footage. They talk a lot about them in social media, not not Twitter, YouTube. You can find a very good piece on YouTube. They've traced Mpaka the properties the guy has he has big homes in the US, multiples of cars, and Mwenyewe car Equatorial Guinea. The son lives in lavish life, you know, and end up shopping in Europe, you know, and anyway. So the country is underpaid. Wana drill oil lakini nchi inalipwa kiasi cha chini. It's like they're paid 60% of the value, you know. And the guy says, no, we are doing it because. So transfer pricing, unasema hivi. Transfer pricing is important in international taxation. Transfer pricing is important in international taxation. Transfer pricing is important in international taxation. As it involves the transfer of goods, as it involves the transfer of goods, as it involves the transfer of goods at stated prices, as it involves the transfer of goods at stated prices, which will determine the tax revenue, which will determine the tax revenue from the country, which will determine the tax revenue from the country where the profits are generated, which will determine the tax revenue from the country where the profits are generated. From the country where the profits are generated, it is widely used by multinational corporations. It is widely used by multinational corporations It is widely used by multinational corporations, which have their operations in several countries. Which have their operations in several countries. Which have their operations in several countries. Then you say laws are established to ensure that. Laws are established to ensure that. Laws are established to ensure that transfer pricing is not abused. Laws are established to ensure that transfer pricing is not abused. Laws are established to ensure that transfer pricing is not abused by multinational companies. Transfer pricing is not abused by multinational companies because several countries have a tax interest. 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 Because several countries have a tax interest in their operations. Then you say most countries enforce tax laws. Most countries enforce tax laws. Most countries enforce tax laws. Most countries enforce tax laws based on the arm's length principle. 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 As defined by the organization, based on the arm's length principle, as defined by the Organization of Economic Cooperation, as defined by the Organization of Economic Cooperation, as defined by the Organization of Economic Cooperation and Development, as defined by the Organization of Economic Cooperation and Development, or in brackets OECD model. OECD model. OECD model. Next are the income tax transfer pricing rules. 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 But first we look at definitions, some definition before we can introduce the rules. The first definition, let's define in quotes arm's length. Define arm's length price. So let's define arm's length price. What do you mean by arm's length price? Arm's length price. So you say, this means the price that is payable. This means the price that is payable. This means the price that is payable in a transaction. This means the price that is payable in a transaction between independent enterprises. This means the price that is payable in a transaction between independent enterprises. Next definition, comparable. Comparable transactions. Comparable transactions. When you say these are transactions between which there are no material differences. These are transactions between which There are no material differences. These are transactions between which there are no material differences. There are no material differences, or in which reasonably accurate adjustments. These are transactions between which there are no material differences, or in which reasonably accurate adjustments, can be made to eliminate material differences, Then we have controlled transactions. So say these are transactions that are monitored. These are transactions that are monitored to ensure payment of an arm's length price, for goods or services, Then we have related enterprises. You see, this means one or more enterprises. Whereby A, one of the enterprises participates directly or indirectly, in the management, control, or capital of the other. One of the enterprises participates directly or indirectly in the management, control, or capital of the other. Or B, a third person participates directly or indirectly. In the management, control, or capital. Or both. New paragraph, you say, the purposes of transfer pricing rules are, the purposes of transfer pricing rules are, A, to provide guidelines, to be applied by related enterprises. In determining the arm's length prices. To provide guidelines to be applied by related enterprises in determining the arm's length prices, of goods and services, in transactions involving them, of goods and services, in transactions involving them, and B, to provide administrative regulations, to provide administrative regulations, to provide administrative regulations, to provide administrative regulations, including the types of records, to provide administrative regulations, including the types of records and documents to be submitted, including the types of records and documents to be submitted to the commissioner by any person, to the commissioner by any person, to the commissioner by any person involved in transfer pricing, by any person involved in transfer pricing arrangements, by any person involved in transfer pricing arrangements. The new paragraph, the transfer pricing rules shall apply to the following. The transfer pricing rules shall apply to the following. The transfer pricing rules shall apply to the following. A, transactions between associated enterprises. Transactions between associated enterprises. Transactions between associated enterprises. Transactions between associated enterprises within a multinational company. Transactions between associated enterprises within a multinational company where one enterprise is located in Kenya, where one enterprise is located in Kenya, where one enterprise is located in Kenya, and the other is located outside Kenya, and the other is located outside Kenya, and B, transactions between a permanent establishment, transactions between a permanent establishment, transactions between a permanent establishment and its head office, transactions between a permanent establishment and its head office or other related branches, transactions between a permanent establishment and its head office or other related branches. New paragraph. The transactions that are subject to adjustment. The transactions that are subject to adjustment. The transactions that are subject to adjustment of prices include. The transactions that are subject to adjustment of prices include. The transactions that are subject to adjustment of prices include. The first one, sale or purchase of goods. Sale or purchase of goods. Sale or purchase of goods. Next bullet, sale, purchase, or leasing. Sale, purchase, or leasing. Sale, purchase, or leasing of tangible assets. Sale, purchase, or leasing of tangible assets. Next bullet point, transfer, purchase, or use of intangible assets. Transfer, purchase, or use of intangible assets. Next, provision of services. Provision of services. provision of services. Next transaction, lending or borrowing of money. Lending or borrowing of money. Lending or borrowing of money. Lastly, any other transactions which may affect the profit or loss. Any other transactions which may affect the profit or loss. Any other transactions which may affect the profit or loss of the enterprise involved. Next are bedding the methods. The methods approved for transfer pricing. The methods approved for transfer pricing. The methods approved for transfer pricing. The method approved for transfer pricing, the first method is called comparable. Comparable and controlled. And control price, or what you call cap method. Comparable and controlled price method. So you say under this method, the transfer price, under this method, the transfer price, under this method, the transfer price in a controlled transaction. Under this method, the transfer price in a controlled transaction is compared. Under this method, the transfer price in a controlled transaction is compared with the price in uncontrolled transactions. With the price in uncontrolled transactions. The price in uncontrolled transactions. And accurate adjustments are made. And accurate adjustments are made. And accurate adjustments are made to eliminate any material price differences. And accurate adjustments are made to eliminate any material price differences. And accurate adjustments are made to eliminate any material price differences. And the next method is called resale price. Resale price, or RP method. Resale price or RP method. When you say the transfer price of the product, the transfer price of the product is compared. The transfer price of the product is compared to the resale price. The transfer price of the product is compared to the resale price at which the product is sold. The transfer price of the product is compared to the resale price at which the product is sold to an independent enterprise. Is sold to an independent enterprise. Sold to an independent enterprise, provided that in the application of this method, 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 the resale price is reduced. The resale price is reduced. The resale price is reduced by the resale price margin. by this resale price margin, by the resale price margin of the product, the resale price margin of the product. Then we have cost plus or CP method. Cost plus or CP method. We say the costs are assessed using the costs are assessed using the costs incurred by the supplier. The costs are assessed using the costs incurred by the supplier of a product. The costs are assessed using the costs incurred by the supplier of a product, by the supplier of a product in a controlled transaction, with a markup added, to make the appropriate profits, in the light of the functions performed, the assets used, functions performed, and the risks assumed, by the supplier. In the light of the functions performed, the assets used, and the risks assumed by the supplier. Then you have profit split, or PS method. Profit split or PS method. Then you say the profits earned in very closely. Interrelated and controlled transactions. The profits earned in very closely interrelated and controlled transactions are split among the related enterprises, depending on the functions performed, by each enterprise, in relation to the transaction, and compared with the profit split, among independent enterprises, in a joint venture. Then the last method is called transactional net margin, or TNM. Transactional net margin, or T&M method. They say the net profit margin attained. The net profit margin attained. The net profit margin attained by a multinational enterprise. The net profit margin attained by a multinational enterprise in a controlled transaction. The net profit margin attained by a multinational enterprise in a controlled transaction is compared to the net profit margin that would have been attained. Is compared to the net profit margin that would have been attained in comparable transactions. That would have been attained in comparable transactions. The new paragraph will say, where the arm's length price, you can put arm's length price in quotes, where the arm's length price in quotes, new paragraph, you say where the arm's length price in quotes cannot be determined. Where the arm's length price in quotes cannot be determined using any of the methods specified above, where the arm's length price cannot be determined using any of the methods specified above, an enterprise shall be required to apply. An enterprise shall be required to apply. An enterprise shall be required to apply any other method that is most appropriate. Any other method that is most appropriate. Any other method that is most appropriate. Having regard to the nature of the transaction, having regard to the nature of the transaction, having regard to the nature of the transaction or class of transaction, having regard to the nature of the transaction, having regard to the nature of transaction, the nature of the transaction or class of transaction, or related persons, or related persons, or related persons, or functions performed, or related persons, or functions performed, or functions performed by such other persons, by such other persons, by such other persons in relation to the transaction. By such other persons in relation to the transaction. So that brings to an end our topic on cross-border. But I want us to look at one question before we turn to the last topic. You need a break. Okay, you can have a break.
Switzerland is not part of that's how it's.
Which one?
Switzerland.
It is.
Okay. Switzerland has some
Switzerland is.
British Virgin Islands.
Yeah.
They are our home president at least.
Yes. So look at April 2022. So there's a question in April 2022.
Number?
So look at April 2022. That question 3.
How was that? Uno, ¿dónde tira? Oh, you. Oh, okay. Oh, mi special place in the nice. Okay.
So April 2022, question 3. And I want to request that we have an alternate today.
Yeah.
We can start early, like 1:30 and end by 3:30 instead of 4.
One.
I can't start exactly at 1 because I have a class that ends exactly at 1. So we can break for that half an hour, then we start at 1:30. And then we finish by 3:30 instead of 4.
How about 1 hour? Yes, okay.
Which one?
Yes, we have a class of this.
I have a class after this.
Oh,
That's why I'm saying I can't even start at 1.
okay.
Because I have to. But if you can start at 1:30 is okay. 1:30 and then we finish a bit early. So the question says this. This is question 3A. Evaluate 4 factors to be considered in determining the appropriate methods of transfer pricing for multinational corporations in your country. And it's a whole 8 marks. Then, April 2022, it's there. Question 3. He says, Nika Limited sold a machine to Bora Limited, an associate enterprise, and in turn, Bora Limited sold the same machine to Sada Limited, an independent party, at a sales margin of 30% for 4 million. Bora Limited had incurred 40,000 as expenses in shipping the machine to Sada Limited. Required calculate the arm's length price to Sada Limited. So we're using the resale price method. So first of all, let's evaluate the factors. So factors to be considered in determining the appropriate methods. Factors to be considered in determining the appropriate methods for transfer pricing. Factors to be considered in determining the appropriate methods for transfer pricing. Factors to be considered in determining the appropriate methods for transfer pricing. The first factor, the nature and class. The nature and class of the transactions. The nature and class of the transactions. The nature and class of the transactions. Next factor, the class of associated enterprise. The class of associated enterprises. The class of the associated enterprises entering into the transactions. The class of the associated enterprises entering into the transactions, and the functions performed by them, 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 taking into account, and the functions performed by them, taking into account, and the functions performed by them, taking into account the assets employed, taking into account the assets employed, the risks assumed, the assets to be employed, and the risks assumed. The assets employed and the risks assumed by such enterprises, and the risks assumed by such enterprises. The next factor, the availability coverage, and reliability of data. The availability, coverage, and reliability of data. The availability, coverage, and reliability of data necessary for the application. Necessary for the application. Necessary for the application of the method. Necessary for the application of the method. Next factor, the degree of comparability existing. the degree of comparability existing, the degree of comparability existing between the transactions, the degree of comparability existing between the transactions and the uncontrolled transactions, and the uncontrolled transactions, and the uncontrolled transactions, and the uncontrolled transactions, and between the enterprise, and between the enterprises, and between the enterprises entering into such transactions, and between the enterprises entering into such transactions. Next factor, the extent to which reliable and accurate adjustments, the extent to which reliable and accurate adjustments, the extent to which reliable and accurate adjustments can be made, the extent to which reliable and accurate adjustments can be made to account for the differences, if any, the extent to which reliable and accurate adjustments can be made to account for the differences, if any, between the transactions and comparable and controlled transactions, between the transactions and comparable and controlled transactions, or between the enterprises, or between the enterprises, or between the enterprises, or between the enterprises entering into such transactions, or between the enterprises entering into such transactions. And then finally, the nature, extent, and reliability. The nature, extent, and reliability. The nature, extent, and reliability of the assumptions required to be made. The nature, extent, and reliability of the assumptions required to be made. Of the assumptions required to be made. Of the assumptions required to be made into the application, into the applications of a particular method, into the application of a particular method. Then B, look at B. So Mika Limited sold a machine to Bora Limited, an associate enterprise. In turn, Bora Limited sold the machine to Standard Limited, an independent party, at a sales margin of 30% for 4 million. Bora Limited had incurred 40,000 shillings as expenses in shipping the machine to Standard Limited. Required, calculate the arm's length price charged to Standard Limited. So B, arm's length price So the selling price so the selling price was 4 million. That's the selling price. Then from 4 million, we lessen. This method, we're told, provided that you make adjustments for the sales margin. So you lessen the sales margin, you make adjustments for the sales margin. So sales margin the sales margin is 30% of the selling price. So that's 1.2. Then there are expenses that were incurred. So we've adjusted for the sales margin, and then you also adjust for the expenses incurred. So the difference is the arm's length price. There's a very similar question, extremely similar. Actually, this one was copied from that one. I think it's in 2017. I'm not- Just get it. Very similar. But it's just the same question, just gap. I think it's May 2019. I think it was May 2019. Let me just confirm. It must be May 2019. Let's see where the question is. Yes, it's May 2019, question 3. So part 3 is exactly like this. May 2019, yes. May 2019, question 3. I don't know your page numbers, but mine is 29. Is it 29? May 2019, question 3. I think the examiner must adapt this one. May 2019, question 3. It's A and B. It's exactly the same as April 2022. A says, explain 4 factors to be considered when selecting the most appropriate transfer pricing method. That's the same as what we have answered. Then 2, A Limited sold a processing machinery to B. So hapa ni A na B, na kwa ile question nyingine ametumia majina, sio? So the same machine to C, an independent party for 400,000 at a profit margin of 30%. Incidental cost incurred before selling was 4,000. Using the resale price method calculated. Hebu jaribu calculate your arm's length. It's the same question. Actually, you are seeing 4 million, see 4,000. I think kuna error hapo. It's supposed to be 4 million, May 2019. It's the same question too. Yeah. So that's cross border tumemaliza. Sasa tumebakisha topic moja ya mwisho which I want to introduce. Tutaendelea nayo kidogo saa 8. Tukimaliza hiyo basi ni hivyo. So the last topic is called tax planning. So tax planning is our very last topic. So tax planning, you see this. Just some introduction, then we stop there. So we'll continue with it at 1:30 when we meet in the afternoon. So tax planning. So we say tax planning. Tax planning is the arrangement. Tax planning is the arrangement of the affairs of a taxpayer is the arrangement of the affairs of the taxpayer, is the arrangement of the affairs of the taxpayer in such a way as to reduce their tax burden. In such a way as to reduce their tax burden. In such a way as to reduce their tax burden or liability. In such a way as to reduce their tax burden or liability without contravening. Without contravening any tax law or regulations. Without contravening any tax law or regulations. Without contravening any tax law or regulations. It involves the exploitation of the loopholes. It involves the exploitation of the loopholes in the tax legislation. It involves the exploitation of the loopholes in the tax legislation, including tax reliefs, and allowances to reduce the tax burden. Lastly, we say tax planning is distinguished from tax evasion. Tax planning is distinguished from tax evasion. Tax planning is distinguished from tax evasion, which is illegal under the tax legislation, under any tax legislation, which is illegal under any tax legislation. So tax planning is also referred to as tax avoidance. It's the same thing, or even tax mitigation is the same thing. So let's meet at 1:30 and continue with the same.
No me digas. Ya los que hay por ahí. Su metro, ¿verdad?
Yo ya envié nada más.
Ah,
Sí, también eso.
bueno, luego igual. Yo te digo igual.
La station está completa.
¿Cómo le digo? Veamos qué. Yes. It really helped me. So, but I'm still following up for it to get a reasonable price so that we can finish the other process. Yeah. It's still in Nairobi, it wasn't allowed to progress. Yeah. Okay, yeah. That's still there. Oh, so I tried calling the guy for now. So he sent me the same discussion we had before the video. I know we wanted the price, the price points. Yeah, and then the chairman of that also be committed to help developing for government gives us tax relief and everything. Yeah, and I think yes. And then they keep it in that we're working around the partner. So I don't know. That's actually then run after. Yeah. So I invest in that via no, it's a roughly. And then for techno, they give roughly around $6.9 million for the past year. I think we get, he wants to go in that.
Cooperative societies.
Yeah, very bad. The first year, the second year now they can see, they can draft it up and look at it. Might be that. And that's how we. Yes. And that we them they don't go direct. They must have a so actually the way you ask, set up and then they give they give you materials and everything, and then they charge the operations. I think $2 for their expertise for the technology. So they share their reservation fast, which I think now the city was not pursuing. The controls, you see, those controls, right? The market, the buy, the rate, and I think yes, because because people are not paying taxes there, and yet you are paying everything is very expensive. So who will you pay the force? You can go to the 2 and get the same for cheaper, maybe 1,500 difference. So there was some concern about control illegal imports. So we actually we see their commitment, they want to do it, The other time, they are not, because they are just on the fence waiting to see what might happen after 1 year. You see, no? Yeah. That's the part of the most of the game. But money on see, I think I was a leader. So when I get my post, I know it's getting more. Select one as next speaker. She was a country for meeting in the field. Okay. Yeah. Yes. That's what we get. Unless it is we do it, but that's what we get. I mean,
Then kuna alternative. It's expanding. Very when it will be extended to usually require taxation.
Usah kan bela tak ada. Kita tak ada siapa tak bela. Ya belakang dengan apa? Kan bela belakang kan dengan apa? Banyak semua.
Lama kusomea hii.
Na ingine class ya asubuhi.
So kwenye
Friday morning. Tunamalizia taxing investigation. Next week tutaenda next week.
fulani. Sema kana unaona nikia
Ama tutakwenda wote moja.
ila zingine hizo.
Saturday and Sunday. Ingine Thursday asubuhi na Saturday asubuhi.
Hii ni kwa sasa.
Orang kan sekolah kelas B itu baru. Itu kelas satu.
So, afanya kazi kama tunafanya pamoja. Ama
Sasa nyinyi mko mbele kidogo. Naanza new topic sasa kwa nyuma. Tukikunja ndio tutaanza hiyo new topic.
so sasa sasa kwa sasa.
Tushakuachia. Ilianza saa 10 bila siku. Tunachelewa lakini anakopesha fika. Wanafunzi. Tunakuwa class ya watu watano. Alafu bado kuna muda.
Orang itu semua langsung sana.
Nipa.
Itu kan waktu semua kan beda. So Sunday mau ngomong kelam tak. Kelas bukan cuma Sunday.
Ni kama watu wengi walipita.
Tahu kamu.
Ni kama watu wengi walipita.
Kelas ini tunaku waktu. Ini sih jago. Itu cuma Sunday kan so. Sunday from 8 saya mesti kan. Cuma pesannya dalam exam sudah kan. Sudah tahu ya. Sama lupa masalah white class. Nah, gitu. So, ini gua main di dalam sebuah biasa sendiri. Nah, banyak apa itu? Tapi lo banyak. Tapi lo banyak. Exam.
Pale Kenyatta University. Tapi dia juga kansaidia. Jadi bayar sini pakai akan juga kod kita kulipa.
Abu
Karena
tapi ada Samsung. Tapi ada Samsung.
iya university ya.
Itu bukan gitu.
Ayo dari
Katika zetu tulifanya
Itu kelas itu sih dari. Kuna jamaa walikuwa tu wameipa. Ilikuwa shule. Sasa alishika zote.
zote. Sasa hiyo labda mwenyewe sometimes inamjenga mtu mwingine. Kwa mtu mwenye asili amekuwa akiamka aje.
Gimana unamajua mbona unafanya basi? Hata wao wanatoka au kwa sababu wanaleta.
Unasema nini? Bwana kauli.
Amen.
Udah selesai nih, udah. Banyak banget ya.
Masih pikir.
So,
Kama jamaa anasema moja. Trust the basis.
Sama kamu mau saya bahasa Indonesia.
Ternyata mereka ya. Mungkin ada yang bisa. Bapak punya graduation. Graduation. Yang bisa dari mana? Kembali dalam kwa secara secara kalau pada kita secara tiga soalnya lebih belum tiga ada apa yang proses kita bisa masuk ke sekarang ini. Tuh sih kan, belum sih ada yang ada di pada tulis. Karena juga aku ya buat nama jalan saya mau proses itu bukan saya kata ya. Nah jangan di sini.
Nah semua. Aku ada acara sih, tunggu ada acara.
Ini masih ini ya.
Oh, suara mana? Aku ada lihat.
Apa itu? Orang bicara lagi ada bicara. Masih nak itu ya ada solusi. Apa dia nak? Ini
Mana? Wajibu.
ya juga ada. Ini ada tahu ya. Dia ada juga ya. Nanti ada sekolah. Ini contoh.
Oke, apa sih?
Ada yang bisa. Ada bisa tu ya.
Sisa kalau mana?
Saya tahu. Masuk ada dulu. Para pakar tahu. Apa mereka bukan tidak yang lain di yang itu orang cinta dia berteriak kasih tri problem farmers kalau no es tres batería de gas son tres para familia de manera las cantidades ya para 5,000 acres la familia ni ya se puede
Soalnya belum beli strategi. Bisa belum beli soalnya.
macam berkata kalau kita ada dekas ini mungkin juga jadi yang tidak dari karena kesannya bermurid panik.
Wah, kau mana? Ada kasih.
Jadi sekalian ya. So saya suka around dan dua itu kan sebuah.
Tahu.
So tapi kan mali
Lain aku ya kan.
tapi ini orang itu ya.
Saya jangan saja.
Orang apa itu? No, buat yang nanti buat. They don't want to.
Mana bahasa ini dia bahasa.
Bukan berbeda, Vamos prayer. Lala pole empio usando paisa. Sasa huyo paisa ndio kabo msema sasa.
ndani au wangu.
Kwa
Some would see a puzzle in the community that if we become a house rubber stamp things that we know, usually our role that Mr. Speaker, we need to look at this. And I'm looking at my fellow members of the parliament supporting a name of a person attempting to get the kind of knowledge of a woman without a causes I grab.
No generic.
Not generic.
No generic. No original.
Qualification.
Yeah. Right.
Pero no, sí.
Yes. Yes. I want to go to get
masih kayak apa kan dua hari juga gitu. This year. Kasih bisa di kerjaan kalau ini apa? Harus perusahaan. Sa. Sa. Ayo, jauh. Oh, ada seperti itu. Jadi yang banyak yang sebut. Kami ada kata. Sa. Robert. Sa. Io posso pochi secondo ma tipo mi casa di già non sei già in tanti di umori da punto in io punto via tutta l'ora che storia anche per che da o per vedere che con il di ya dire che già ni da ya ni se lo Pues uno que puede así é algo que não é mudado, não é necessário. Vai ter que processar. Perché i vedi sono tutti spunti, pure la stessa cosa vuole fare tutto. Kamu ngomong di desa ya, buat pilih kok buat pilih gitu. Ya. Kasuali pun nanti nanti buat kayak gitu. Kamu kayak naik ke Cina, flight, naik ke flight. Kalau itu pun ya flight sebenarnya. Jadi condition baik atau pas. Iya, tadi. Waktu buat kayak apa kan? Salah boleh jadi.
Just